Small businesses employ 62 million people, roughly 46% of the entire workforce. In the last 25 years, small businesses have created over 13 million new jobs added to the economy. You guys are the backbone of the economy. You guys are the hero of this country. So thank you guys very much for all you small businesses. Now the negative is most small businesses, 20%, I shouldn't say most, 20% of all small businesses fail within the first year, 50% within 5 years. The number one reason for business failure is their inability to secure capital. Lack of liquidity, run out of reserves, just lack of capital. So that's kind of what we're talking about today with this program. There are many programs out there related to the SBA, but I labeled this government guaranteed loans because there are more than just SBA loans that are available out there. And so what I was hoping to do today is just kind of share with you 3 main programs that we and many other banks utilize for your ability to access capital. There are a lot more programs than this, but these are kind of the 3 primary ones that are available to you. So the first one, let's quickly talk about this, the SBA 7A loan. SBA 7A, this is their flagship program. This is what most people borrow money under when they are borrowing money from banks utilizing some form of government guaranteed lending. A couple of quick terms related to the 7A loan. It's a max loan of $5 million, ranges anywhere from 10 to 25 years depending on what you are using the funds for. Saul mentioned earlier that the government guarantees the bank. And the reason why that's a big deal for us is one of the myths about SBA loans is that it's for bad credit or bad borrowers. And that couldn't be any, it's not true at all. So what this does, it allows us to change the terms that we otherwise couldn't offer to a borrower under conventional means. So think about this. If you were to ask us for money for equipment loan, typically we would do that from 3 to 5 years on a conventional basis. You might not be able to cash flow that loan on the 3 to 5 years, but utilizing the SBA loan, we could give you a 10-year loan. With a 10-year loan, longer amortization, smaller payment, now all of a sudden you qualify. So that's the benefit of the guarantee to the bank. It allows us to offer terms that we couldn't provide to you on a conventional basis. One of the kickers is anybody that's 20% more or owner of the business has to guarantee. That's a mandate that is not optional, non-negotiable. 20% more owners must guarantee. There is a guarantee fee, but there is no loan fee. So it's about the equivalent of a loan fee, a bank loan fee. Most types of loans are available anywhere from equipment loans, buying a building, construction, lines of credit, business acquisitions, and we'll talk a little bit more about this later on different uses of these loan proceeds. However, there's a couple of caveats. You have to be what they call an SBA eligible business. You are borrowing money from the government. Actually, you borrow money from us, but it's backed by the government. And so you have to be a legal business, both federal, state, and local. So in Nevada, I believe marijuana is legal, right? Can't use the SBA loan for it because it's federally illegal. So if there's any form of business that might be illegal in any government realm, whether it's federal, state, or local, it does not qualify for SBA borrowing. You cannot restrict patronage. Think of the old, does it exist, Curve for Women? Curves, does that still exist? If you guys remember the old Curves for Women is a gym that only women could access. It's not legal for SBA financing because it restricts patronage to men. Multi-level marketing doesn't qualify. You can't have a previous loss to the government. These are some of the things that are ineligible. And investment, all right? The idea of the SBA loan is to help a small business with their operation, not with investors. Okay, so that's the basic premise of the SBA loan. Any loan term that's longer than 15 years requires a prepayment penalty of 5% the first year, 3% the second year, 1% the third year. So there is a prepayment penalty associated with the SBA loan. The next loan that is often used is the SBA 504 loan. This is a neat product in that it is primarily used for long-term fixed assets. Think real estate, but it can be other things. Think construction earth moving equipment that has a long-term useful life can be used with the SBA 504 loan. It has a unique structure in that there are two parties involved outside of the borrower. The bank will lend you money under conventional terms at 50% of the entire project cost. So when we say entire project cost, it's not just the acquisition of the building, but the fees, and any tenant improvements, maybe there's fixture, furniture, and equipment that's going involved. All that could be wrapped up in the 504 loan, and that entire project cost, the bank will finance 50% of that for you, and we'll take a first deed of trust on the real estate. The second portion is the CDC loan. A certified development company through the SBA will lend you 40%, up to 40% of the funds. Now the bank loan, 50% is regular bank conventional terms. Whatever the bank offers on a commercial real estate loan, that's what they'll offer you on a 504 loan. The 40% CDC loan can be up to 25 years. It could be 10, 20, or 25-year loan, fixed rate for the entire term. So there's a real nice benefit to there is that you get to blend the rates together and you have a fixed rate term for the entire term of the loan through the CDC. However, there is a 10-year prepayment penalty on that, okay? And then you as the borrower will come in with a different 10%. There's parentheses in there with different numbers. If you are a startup business, you are required to come in with an additional 5%. If it is a special purpose building, think gas station, think self-storage unit, think hotel, that's yet another 5% you can come in. So if you were a startup business buying a special purpose building, you would have to come in with 20% down. Bank would still finance 50%, and the CDC through the SBA or the SBA through the CDC would finance 30%. So it's still a really good program for low down payment. So if you want to access the loan, but you don't have a whole lot of money to put down, SBA 504 loan is a very good option. You have to show that you can make the payment through your business, not through rental income from the rest of the building if you were leasing out the rest of the building. And I'll talk a little bit more in another slide about if it was a construction loan. And as I mentioned, there's a 10-year prepayment penalty. So those are two of the main SBA loan products that are commonly used in the marketplace. Now, the third one is the USDA, United States Department of Agriculture, BNI, Business and Industry Loan. This is interesting in that it has different caveats in the SBA in that you can use it for nonprofit businesses. You could even use it for some investment up to $25 million. The purpose, the mission of the USDA BNI loan is to economic development and job growth in rural areas. And they define rural areas as a population of 50,000 or less. So outside of Las Vegas in the state of Nevada, we have a lot of rural areas, right? This is a good opportunity. So, and it can be used for investment properties too as well. So if you're looking at acquiring equipment for your business, looking to buy real estate, and it's outside of the city in a rural area, this is a good opportunity too as well. So those are the three main lending programs that we utilize. There are other banks that will utilize more programs, but these are the three most common ones I wanted to share. And then let's kind of talk quickly about some of the uses of these funds. We talk about business acquisition and some of the key concepts for this. So specifically with SBA, we do a lot at GBank financing for business acquisitions. In fact, this is probably our number one use of SBA funds. Made us the top 15 lender in the nation for the past 4 years is through this program here. One of the key concepts, though, if you're going to buy a business, we're going to look pretty hard at the selling business. How has it performed historically, right? Because that is going to be ultimately the source of repayment that's going to pay back our loan. The second thing is we want to make sure that you have experience in the industry. I consider myself a pretty good cook. I could cook pretty good steak, chili, spaghetti sauce, all the good stuff, right? I've been a banker my entire adult life. I am nowhere prepared to run a restaurant, okay? So although I might buy a restaurant that has great success historically, I would not qualify for this because pretty much I'm going to run that place into the ground, okay? So we are going to look at you and your experience and relatable experience to qualify for that loan. We talked about commercial real estate, purchasing commercial real estate. Again, you must occupy 51% of the building. Again, we're lending to a business, not to an investor. Construction loan. So here's a little twist on that. If you're going to use money that's guaranteed by the government to construct a building, you have to occupy immediately 60% of the building, and then you have to have the ability to occupy another 20% within the next 2 years. So let's think about this. If you build an office building and you are occupying 60% right away, and the other 40% you sign a 5-year lease with a tenant, you will not qualify because you do not have the ability to occupy another 20% within the next 2 years because you just entered into a contract with a tenant that's occupying the other 40%. So that wouldn't qualify, but if you have the ability, if it was broken out to 3 units and one of the units was only a 2-year lease and that represented another 20%, that would qualify, okay? Purchase of equipment, that's pretty simple. We're gonna look at your business and historical cash flow ability to pay back the loan. Refinance eligible debt. The Fed dropped the rates yesterday, which in return dropped the Wall Street Journal prime rate from 8.5% to 8%. There's a good chance many of you may have borrowed money in the last 4 years, and the rate was probably high, just because the rates were high then. Well, as the rates start to drop, you might want to consider refinancing some of that debt. Well, 2 key considerations on that. The original purpose of the debt that you had has to be eligible for SBA financing. So it couldn't be something like if you bought a Curves for women that does not qualify, you cannot refinance that kind of debt. If it was debt that was to acquire something that's federally illegal or state illegal or whatever it is, would not qualify. So as long as it's eligible for SBA financing, and the second caveat, it must have a 10% savings. So we're going to look at what the new term would be under this loan. If it saves you 10% of monthly payments, that's one of the key qualifications for refinancing debt utilizing an SBA loan. Partner buyouts. We see this a lot. A couple of people get together and say, hey, let's start a business. You know, my best friend and I are going to do it. We're going to be great. We're going to rule the world. Come to find out, you guys don't really have a whole lot in common when it comes to business acumen, and somebody wants out. You can use an SBA loan for a partner buyout. Typically what happens, the remaining partner and the business itself are going to be co-borrowers on that. So, and we want to make sure that the business or the partner that's being bought out wasn't the key person, wasn't the guy with the magic recipe, right? Wasn't the person with the license that was allowed that business to operate. So those are some of the things we're going to look at. Business expansion, we use this quite a bit. If you have an existing business and you want to open up a second, third, fourth location, we are going to look at the historical strength of the business. It doesn't have to support the new business by itself, but we are going to require you to put together a full business plan with projections and assumptions. It was mentioned earlier, Sonny, you may have mentioned it, or it was Saul, about the SBDC, Small Business Development Corporation. They will provide support for you in putting together a business plan. They won't do it for you. You put together your business plan, but they'll review it. They'll poke holes in it. They'll give you some data so you could support your projections with valid assumptions, which is what we need. And so I encourage you to visit the SBDC. Even if it's not for business planning, they have a lot of resources for access for data in your market area. So it could be very useful for you in your marketing efforts. Startup businesses. We don't do a whole lot of those at GBank unless it's for a professional. Think medical. That's I'm a licensed doctor and I want to get out of being an employee and I want to start my own practice. Is something we would consider. But again, you're going to be required to provide us a business plan with 3 years of financial projections, with the first year being month to month. Can't tell you how many times I've seen projections and the month to month was equally divided by 12. Okay, how many businesses do exactly the same amount of revenue and expenses year round, right? There's some, I'm sure it exists, but there are seasonalities in a lot of businesses. By the way, you pay property taxes 2 times a month or 2 times a year, so probably not divided equally. So in the short amount of time that we had, I was hoping to cover just some of the basic, the more used products, the SBA 7A, the 504, and the USDA BNI, and some of the basic uses of those. There are more uses, and there are more products out there. We have a team of a whole SBA department that specializes in government guaranteed lending, highly trained, that could answer a lot of questions for you about your unique circumstance.